we've got virtually the head of Group Corporate Finance at Adani Group, Anupam Misra. Welcome. How are you doing today?
Good, Eddie. How are you?
Good. We've also got here in our studio the Global Vice Chair of Global Delivery Services at EY, Srini Rao. How are you doing today?
Very well, thank you.
Good. And also the CEO of Children's Investment Fund Foundation, Kate Hampton. Thanks for joining us.
Thank you. Nice to be here.
So, Anupam at Adani, let's talk to you a little bit. As a corporate, what are your views on funding the green projects? Do they make business sense now, or are there significant incentives still required?
See, I think when you look at renewables, when you look at green infrastructure, I think it's the need of the hour. And as Aditya rightly mentioned, this is something that is not a responsibility at a government level. It is more a responsibility today at a corporate level, and going beyond the corporate, it is also a responsibility at the individual level as well as a citizen of the world. Now, coming back to how as a corporate we are looking to fund it, I think the market globally is very, very vibrant right now. And there are massive sources and pools of capital available. I'll give you a few examples. I mean, as a portfolio within Adani Group, we've done 3 green bonds in Adani Green Energy Limited. We've done a sustainability linked bond 144A regas issuance in Adani Electricity Mumbai Limited. We are in the works to do our first SEC registered issuance from Adani Green. So we're talking about at least $4 billion that we've raised this year. And there is a substantial pipeline that we have in the future as well for these issuances. Overall, to look at it, I think renewables as a business, green capex, is something which does not require any incentive at this stage. It is something that makes natural sense. If you see if you take the example of solar power, in 2010, about a decade back, solar power was about 2.5 to 3 times, in fact, around 5 times the tariff that it is currently. So that means that with the technology interventions, the tariffs have come down. And the same story will play out for hydrogen. The same story will play out for storage and few other sources. What that would mean is that energy no longer needs to be infirm. It will your baseload power will become renewable power, and massive amount of investment as a group we are doing into this energy transition. Our chairman spoke about this in UK over the course of this week about commitment from Adani Group for investing $50 to $70 billion into the green infrastructure, which includes renewables, hydrogen, solar, wind, hybrids. And about 70% of the overall capex that we as a group will do will be coming in from from the renewable and green sources. So that's the kind of commitment we have to this sector. Our shareholders, our partners, our investors, all of them are fully 100% aligned on this front. And as a group, we have set up a capital management plan, which is also in alignment with this. So, yep, back to you. But overall, as I mentioned, we don't believe that it requires any incentives right now. Few adjustments here and there will ensure that the thrust that is there continues to remain over the course of the next decade.
Thank you. Srini, tell me about your opinions on how we can continue to scale up climate finance.
Well, just to reflect on Anupam's point, I really don't think there's very much fiscal room for policy incentives, policy stimuli that can spur investments in this sector forward. There might be other mechanisms through which the corporate sector as a whole is asked and expected to assume some responsibility for channeling funding into into climate finance overall. I think the scale of the climate finance problem is so unspeakably large at this point that even while we know some of the mechanics, the maneuvers, the tactics, and the implementation that we need to undertake, we're looking at a country that is still 70% powered by thermal and coal. And wind and solar, in accumulation and after many multiple years of effort, are roughly 4% apiece, and 80% comes from a collage of oil and hydrogen and other sources. The scale of the problem is as large as that. In 2015, when India was part of the discussion determining the capital needs for transformation over 15 years, the total aggregate capital requirement was established at $2.5 trillion, which in simplistic terms means about $175 billion a year. In the last 6 years, we have accrued about $20 billion of capital each year. And that's just significantly, subscale, given the scale of transformation that is required. And even within the 20 billion that's been gathered, 40% has come from the government and through government policy and government finances, 30% from the banking sector, 15% from the domestic private sector, and a bare 15% from multilateral funding agencies and FDI, which was established as the primary thrust of the capital infusion into India. So I think we're at a point where we need very, very significant and clear actions by the global community. Not that everything else is something that India will implement. We will need help in doing any and all of that. But the formulation of the problem needs to be more precise, I think, around where the deficiencies, the insufficiencies in capital flows are into the country to drive this change.
Do you want to reflect on that, the scale of the challenge and where we need the money coming from?
Yes, and before I do, I want to congratulate the Minister, because Maharashtra has been really exemplifying the kind of leadership we're seeing from very significant subnational actors. So congratulations to you. I think when it comes to scaling the finance, Sri mentions the lack of fiscal space, but I think it's worth reflecting on the fact that fossil fuels are still massively subsidized all over the world to the tune of trillions. And there are lots of stressed assets, fossil assets, including coal assets, which are now not really economic anywhere in the world, that are sucking up government money. So I think there has to be something said about not just focusing on funding the right things, but stopping funding the wrong things. And I think that applies to public finance as much as it does to private finance. So I think we need to get those incentives right. I think that's crucial. It's also crucial here in the UK, where we subsidize gas use in people's homes and tax electricity use, which is not supportive of the transition. But we do need to scale up climate finance to the tune of about 400+%. And that requires a combination of international and local incentives. So internationally, clearly, we need a post-COVID settlement between developed and developing countries, which is commensurate with the scale of the problem. I think in COVID, we've seen countries very stressed economically, while richer countries have been able to pour money into their economies, and that's created an imbalance. It's also limited access to capital markets for a number of emerging countries. So that needs to be addressed, and COP26 has a role to play in that. But I think nationally, and I think what's really interesting is we're seeing the development of investment taxonomies, which are about directing capital flows to the right places, and policies and regulations around finance itself, not just around energy and the other sectors. I think that's crucial because it needs to signal to the private sector, and things like banking regulation need to include mandatory reporting and disclosure. And I think most countries are moving in that direction. We need to change the cost of capital for dirty, improve the cost of capital for clean. Some of that is international around currency risk and other things. Some of that is domestic around fiscal incentives and regulation. And it's great to see that India is embarking on that journey. And I think there's a lot of learning that needs to be shared across countries, because this is a common journey. Nobody has really done it yet. This is something that we all need to do together. So I think that there's a real opportunity. And I think what's interesting with Prime Minister Modi coming to COP26 and leaders of some other countries, Russia and China, not showing up, I think it shows that India recognizes the competitive edge that going green could provide in terms of attracting capital. So I think there's lots of opportunity here, but countries need to get serious about stopping dirty finance alongside promoting clean finance.
I like that idea of it being the competitive advantage. Anupam, let's come back to you for a moment just to reflect on anything you've heard here, the challenge around whether governments still have the ability to put more money into fiscal and whether we're still subsidizing these dirty industries too much and what could be done about that as well.
No, I think the word we use is transition. So when we talk about transition, we have to look at it. The world is operating in a particular manner today. We have to get it somewhere in the next 5 to 7 years and then eventually go in a manner that it is sustainable. We have to also think of the fact that India today is, in terms of absolute emissions, it's standing at a particular pedestal, but when it comes to per capita emissions, India is also currently energy starved, right? There are still certain portions of the country which do not have access to electricity. So the problem in India is a little more complex than it is in other parts of the world. So it requires a very balanced approach. It requires an approach which does not result in, we saw what has happened in the past few weeks in the lead up to COP26 in Europe and as well as parts of China and India where energy prices went up, shot up. So I think a very balanced approach has to come through. I 100% agree with the views presented on the panel here with respect to how that it is at this moment, it is now that we have to act. We have to make the cost of capital is going to be key here. When you look at any sort of breakup of cost of capital, it is related to factors like risk, and factors relating to risk will typically be like financial risk, interest rate risk, etc., exchange rate risk. Climate risk is something that needs to be introduced now into our models, and what that means is you make climate positive businesses a lower cost of capital. You have incentivized every business house in the world to go towards a business which has a higher return as compared to the cost of capital. So from that perspective, I think that is where the world should be looking at, and I think India is 100% in alignment with this government policy. As was mentioned earlier, COP21, the Paris Accord was when India basically in the past 5 years has showcased, the Indian government has showcased how we are taking this very, very seriously. Adani Green as a company, we came into existence in 2015 when we started our first project, which was then the largest solar project in the world. And today we are already almost close to 20 gigawatts operating capacity. So that tells you that a lot of business houses in the country, as well as a lot of players in India, in consonance with the government, have been taking these steps. So the question around cost of capital is paramount, and that's something that climate finance can do, and that is something is extremely important at this stage.
So let's just come back to Maharashtra. Aditya, I wonder if you want to reflect on some of the things you've heard, the challenges presented by the incumbency of coal and dirty fuel, the challenge of extending electricity to people who haven't had it, and all the benefits that we know that it brings, combined with what you're doing around the green project and financing there. I wonder if you could give us some details.
I think one of the points that I heard in this was very crucial is in terms of how much can we subsidize fossil fuel or non-green energy anymore. I think that is very, very crucial. The other is, of course, about reaching out to areas which not have been powered as yet. The opportunity lies really here, because if we can reach out with green energy to start off with, that is something that can be a huge stride for India. Because to be very honest, India is, of course, you've got a plethora of issues and you've got multiple opportunities in a country like India, because of course a huge population of 1.3 billion people, if we start moving towards a green world, the impact on the world by Indians could be huge. That is very, very important. And again, like I said, for us as governments, the key is we decide how to move forward in terms of sustainability. Now, for Maharashtra, we've got 43 cities really signing up to the Race to Zero. That's 65 million people. That's almost equal to the population of France. Now think of it. Now, if one state like Maharashtra with half its population that is equal to the size of France or the population of France moves towards Race to Zero, and in a country where urbanization is happening rapidly, we need to define what urbanization is. We need to define if urbanization is simply concrete roads and glass buildings and better homes, or do we have better standards of solid waste management, sewage water treatment plants, green energy, renewable energy. We also have electric mobility, 15-minute cities of walkability, pedestrianization, urban forests. If we can create an ideation on what urbanization really means for India, if we can create a whole plan of what the next 50 years for India would mean in terms of reaching out to the population that's not got access to development, yet gets access to sustainable development as a whole new triangle altogether, I think that for us could mean that is green development, and that is where really we see the future in.
Thank you. Kate, let's come back to you, what you've heard from the folks here today, and just reflecting on the projects the foundation is involved in, and where you can see the big step changes to convince people to make the changes that we have to make in terms of the finance necessary.
Yeah, I mean, I think a very important point has been made about social justice. We have to recognize that those with the most resources shoulder most of the burden, and indeed providing clean energy access to the hundreds of millions of people who currently don't have it has to be mission critical. And whether you're in a richer nation or a poorer nation, those issues of social justice are in fact the rate limiter for policy ambition. In the UK, the transition in people's homes will depend upon providing significant social protection alongside support for capital expenditure. So we have to recognize the social dimension of this domestically and internationally. And I think finance will flow with the right enabling environment. The world is not short of capital. The world is short of bankable projects and scalable infrastructure opportunities, which will transition in a transformative way. If we just keep going on incrementally, we will lose the 1.5 window, we will lose the 2-degree window, and that will have the worst impacts on the poorest. So I think in terms of finance, making sure that we're thinking about where are the investable propositions, what are the right incentives, what are the barriers. A lot of those barriers are political economy barriers, but a lot of those barriers are in regulation and in including financial regulation. So we need to
give us some examples there.
In terms of barriers, yeah, so for example, there's a lot of conversation at the moment around the role that corporates should play. And obviously there's climate regulation at the sectoral level, but should businesses be regulated to have mandatory 5-year plans that sort of mirror the 5-year plans that countries have been asked to deliver under Paris? And we've been pushing very hard for something called Say on Climate, which asks companies to develop plans. We've had about 3% of listed companies globally signing up for science-based targets, but only 1% actually have plans to follow that up. So a lot of companies are saying, yes, we're moving in that direction, but if you look at their capital expenditure, or indeed how their CEO is remunerated, or indeed how they're lobbying, it doesn't add up. So we need to make sure that near-term action is consistent with that long-term ambition. And it's not to discredit companies for signing up, but they need to act on it. So without the alignment between the long and the short term, we're not going to get there. But if it's not mandatory, the leaders will be out in front and will miss large chunks of each sector. So if you take what the World Benchmarking Alliance has recently done, for example, 85% of 100 oil and gas companies scored D or E using their assessment, and of 350 global ag and food companies, 50% don't even have a policy on avoiding deforestation. Wow. So in terms of what companies are saying versus what they're actually doing, there's a huge mismatch. So I think we're going to have to go beyond disclosure and target setting and go into really mandatory plans for businesses.
And regulation has to come from government, however, right?
That's right, that's right. And of course it's a chicken and egg in the sense that governments are fearful of regulating unless businesses ask for it. And businesses won't move unless governments provide the right enabling environment. So we have to be able to break through that problem, and we need stronger partnership with business and government working with the leaders in each sector to identify what's possible. We've already got 57 Indian companies with science-based targets, and 24 Indian companies have made pledges on carbon neutrality. So what we need now is for those companies to think about how they develop plans, and as they do that, they will identify what are the barriers in terms of moving capital or moving technology from the lab into the market, and they'll be able to have a great dialogue with government about the kind of enabling environment they need. We need to unlock those conversations, very, very specific conversations around unleashing very specific parts of the transformation. At the moment, it's too high level, it's too long term. It needs to be near term, and it needs to be specific.
So it sounds like businesses aren't necessarily taking the scale of the challenge enough, Srini.
I think it's a mixed bag, Edie. So clearly there are some large companies. One is represented here. Large companies are taking this on seriously. There's been significant capital allocation into this space. There's also been a coalition of corporates that's been trying to act in this space. The scale of the problem, the asymmetry of the problem, doesn't lend itself to insular or even, sort of partially combined initiatives in the corporate sector to be able to resolve. The scale of the problem is of such immensity that I think it's going to take a lot more than just some good citizens, good corporate citizens, to be able to make the change.
So tell me what you would like to see coming from COP26 in terms of some strong leadership or some incentives from government towards business.
Yeah, so one is just the recognition that all of us are coming off COVID and all fiscal balance sheets are strained, not just India, but globally so. Developing nations, and India in particular, need a very organized, systematic, methodical, well-ornamented, financial scheme, whether through the multilateral development agencies or through private sector and FDI, in order to be able to catalyze the change. So the 70% in the thermal sector, which I spoke about, yes, of course, it's riddled with losses and it's hemorrhaging year after year. But there are millions and hundreds of millions of lives that rely on that economy. So it's not about just a clever stroke of the pen that fixes a fiscal policy, but there's human throbbing life in the power plants, in the livelihoods around those power plants. And I think we need a slightly more dexterous and skillful pair of hands in dealing with it. I don't think it's all policy. It's capital combined with a very, very well lubricated implementation plan.
Can I ask our virtual guests to just reflect on what you've heard as well? In our time remaining, I'd love to hear about a project that you are most proud of, that you think exemplifies the kind of thing that can be done to meet the scale of the challenge, and one thing that you'd like very much to see coming from COP26. Let's start with our friend from Maharashtra, Aditya Thackeray.
So what I hear from Mr. Rao and also Ms. Kate is, of course, in terms of two perspectives. One is from Mr. Rao, what we heard is in terms of, it's much more than just corporates or policies coming together. And of course, coming out of COVID, of course, all of us as governments or corporates or industries, all of us have a financial restraint and strain. But if we don't actually move towards climate change or adaptation or mitigation feature, we're going to face many more epidemics and pandemics like this. And in terms of, like I said, our compensation given to farmers and urban areas just last year was almost $2 billion. So that is one. And like what Ms. Kate said, that I obviously agree with the both of them in terms of when we've got industries or companies that have signed up to climate goals, we cannot just say that it's about 2030 or 2040 and then most of us try to interpret that as, okay, today I'm not going to do anything, going to carry on as it is, and maybe 2040 onwards or 2030 onwards, I'll miraculously turn as carbon neutral. Uh, the idea really is to start off every single day in terms of how we can slowly, steadily, and sustainably move towards a carbon neutral future. For example, with the Adani group here, and what he was talking about in terms of renewable energy for Mumbai, I just held a meeting the other day in terms of the 3-4 discoms that give energy to Mumbai. That's BSC, Tata Power, and Adani group. And we were looking at exploring options of how we can get citizens to convert their homes from conventional energy supply to their homes to renewable energy. And of course, you have little green premiums here or there, which could be really subsidized at a future stage by governments or policy if we move off from conventional energy being subsidized. But really, these are some of the things that we need to set targets and act on them. So for Maharashtra, what we have done is instituted the Maharashtra Council for Climate Change, headed by the Chief Minister himself and co-chaired by the Finance Minister. What we're looking at is basically all the departments, be it energy, be it urban development, rural development, transport, industry, multiple departments of the government setting targets for themselves and the benefactors of these departments or the policies that are affected by these departments, and delivering each month that, okay, for industry, this was the target, this is what we've been able to achieve. For forest, this was the target, this is what we've been able to achieve. For example, just in 1 year last year, we've got 9,800 hectares of wetlands coming under the official protection of the Indian Forest Act. Now, this is a month-by-month review. We cannot do this overnight, and we have to move towards 2030 carbon neutrality. Step by step, each day, slowly, steadily, but we surely have to make the move, and it cannot happen overnight in 2030. We have to start today, and that's what I take from this discussion.
Anupam, last word from you in terms of what you'd like to hear from COP and a project that you're particularly proud of that I think exemplifies the potential of what we're talking about here. We know about the solar in Mumbai. Tell us more about that or something else.
No, so I think I'll just pick up on the example that Aditya mentioned. We bought this business, the Mumbai distribution business, in 2018. It has 3% power is being provided by renewable sources, 97% from conventional sources. We have now formally covenanted that by 2023, we will be 30% renewable. By 2026, by 2027, we will be 60% renewable. And by 2030, we'll be 70% renewable. Now, that is taking into consideration all the technical issues you have with respect to the grid. This is a formally covenanted package that we have put out there. We are working very closely with the government of Maharashtra to ensure we can bring more and more renewable power into Mumbai. And we are working, that includes two very complex and large, very ambitious power transmission schemes that are also being implemented by the group, by Adani Transmission, to ensure that more renewable power can come into the grid. And that is something that really exemplifies how, a business house, the government can work together to ensure that we deliver on the climate change. We are also working with various other stakeholders. Aditya mentioned about the green tariff. I think this is an exceptional and very good example of how at the end of the day, climate change will only be successful. I mean, we'll be able to bring about this change if each and every individual, each and every citizen of the country, of the world, agrees that I have to reduce my carbon footprint. Now, one very significant step in doing that is you procure power which is green. You pay a higher tariff for that today. So today the government of Maharashtra has come out with a scheme that with 6% higher tariff, you can get 100% green power. We, as one of the discoms who are supplying power in Mumbai, have gone out and marketed this scheme. We are working with the various businesses. Working with actually high net worth individuals and a lot of consumers in the city of Mumbai to do it. I think this is an example that can be done not only in Mumbai, but all other parts of the country, all other cities. We can start with the tier 1 cities and moving into tier 2, tier 3, tier 4. And then this is something that can serve as a micro example of how this change can be brought about across the world. So it's not really driven by, it's actually driven eventually by the individuals and the consumers of power in a country. And that's very important, and that's probably the example which I would leave this panel with. And if a lot of other players can also continue to do that, we will see that this solution is not that far away.
Thank you. Srini and Kate, I'm going to give you a minute each to tell me about a project you have been involved with or you've seen that you think could be scaled up quickly.
Speaking of the sector that I come from, the services sector, which is not the most emitting sector, as we all know, and you'll see this in the technology sector more broadly, we are looking to re-electrify our buildings, and we have many millions of square feet, as you'll expect, with our citizenry in India and in some other countries. It's a small initiative, but the awareness that we're able to raise with an initiative like that amongst our people, amongst society, amongst the extended family has been huge. So that's our little project for the year that's ahead.
Thank you. Kate, what about you? What project would you point to?
Well, I'm going to deliberately not answer your question and say something about COP, if that's okay. I see so much exciting action happening in India, and if the Indian government could come forward and reflect that action in their international commitments, that would renew its Paris commitment in a way that reflected existing policies and actions, but it would really demonstrate Indian leadership, because I know that the policies and measures that are being implemented in India today are actually much more ambitious than what they have committed to internationally. And if India were to step forward and just reflect what it's doing in its international commitments, that would put India in a real leadership position amongst the G20 countries. And I think there are a number of G20 countries that would look at India and say, wow, we really need to step up, including the US and China.
Thank you, Kate. Strong message there from our panelists. Thank you so much for joining me here on stage in London, Kate, Srini, and also to my virtual guests as well. Thank you very much to Anupam, as well as our minister from Maharashtra, Aditya Thackeray.